Tuesday, July 30th, Stan Ehrlich, market analysis. And I start out with indexes, as you guys know. I go to futures, and then I sometimes go to crypto or sectors, forex, cycles, variety of things. Been at this over half a century. Okay, I've been saying that we are going to go down for about 2.5 months, and this was a couple of weeks ago, into October. The October lows since I believe 1997 have not occurred only 3 times. That's over 90% of the time we've got a buying opportunity in October. Now, normally September, sometimes August, but rarely July, which seems to have been the case now, has started the decline down into October. So can't help it. We've got bearish engulfings at the top of the market and the YM and the NQ. We didn't get one exactly at the high of the market on the E-mini or the Russell, but close. Now, we are about to make, in my opinion, a new low for the trend down since the top, which was about the middle of July 11th in some indexes, and in the E-mini, July 16th. Unfortunately, we didn't get a bearish engulfing. We came extremely close on July 17th, but the high was not higher than the previous day. So overbought conditions, yes. Variety of other circumstances, yes. But no ER sell signal exactly on the top, which again has happened in the YM as well as the NASDAQ NQ. So we're about to make new lows, as I've been telling you in the last several days. Likely this week. Didn't think it was going to happen today necessarily. No surprise, though. But here we come. Be careful now. This is a little late to be going short if you're interested in picking tops and bottoms, which is exactly what my ER signals strategy, go to ersignals.com, does a lot. It misses sometimes, and it does have bad signals. Obviously, all systems do, but we never take big losses. We are very, very covenant of equity. But you'll see some great trades coming up in a moment in the indexes. Okay. I guess we're going to make new lows, hit sell stops, and drop into the support area, and then we might get oversold. Then I'll be talking about a bounce, but not yet. I think we could come down to 5,400, maybe even a little bit lower. This is not a super important support area. Not that big a deal. Basically bearish. We look at the 1-minute chart after the dailies for these indexes, and this is falling apart. We got up into this resistance area earlier this morning, 6:30, and kaboom! We are now down about 6 points in the spider, and that's a decent down day. And 62.75 in the E-mini at the moment, near very close to the low of the day. Okay, so much for the spider. Now on the SPY, actually the spider, that was the E-mini. You know they're related. They're almost identical, but they only have different trading hours and different price scales. But they're, brothers and sisters or whatever. Sell signal almost on top, overbought conditions, gap down, and a breakaway gap. I said at the time it happened, it was likely not to get filled. Now, this gap still has a chance of getting filled, and that's between 553 and about 549.5 a week ago. Right now, we're going to challenge the support area and the previous low on the spider, and I think we're pretty much almost there. Now, this gap still may not be filled. I'm not super encouraged, but it's not that far away, and we do deserve a bounce. And I've got a couple of 2.5 or so months before I'm looking for any kind of a major bottom in October. Next, spider on a 1-minute basis, getting close to those lows. Next, QQQ. almost a new low completely since almost 2 months ago, June 5th. And it looks like we're going to do it today, but we did it only 3 days ago. So I think we're going to break that low and drop off even more. But again, we're getting very, very close to oversold again and closer to a support area. So I think this particular leg down is probably close to an end, and we're going to have a decent bounce, or at least a sideways trading range for a little while. I'd say a week or two, but we're not there yet. I think we're going to make new lows first. Next, QQQ again, and this is the triple Qs, almost a new low in a support area and almost closing an old gap, which probably left only a few ticks behind a few days ago. So all I can say is Tierra del Fuego, heading south, land of fire, a nickname for southern tip of South America. Now, NASDAQ has made new lows since June 4th, today, now. And I'm expecting it to slip off even more. Now, this is not a bear market, in my opinion. This is a large technical correction in a longer term bull market, which started October lows a couple of years ago. And we had an October low last year also. You should be watching my show coming up here a month or two in advance of October, because I'll be using my cyclical analysis software, EC Forecaster, and other tools to verify the October lows are on track, if they are, or not. But so far, so good. New lows. And on the 1 minute NQ September, you can see new lows. And we are still short, going back to the daily chart, from the top of the market on July 11th. The little green lines are what's called trade lines, and they represent in the beginning of the line where you sold short and where the market is currently trading tick for tick. And so I'm expecting this thing to continue to drop off a lot more, looking for a lot lower levels. And here we are on the 1 minute, 5 minute chart, and the trade line will be bouncing up and down with the current quotes. And you can just barely see it moving up and down a little bit. This is a 5 minute chart. Love it. This is turning out to be one of my best trades in the indexes in quite a while. It's a whopper. And that yellow dotted line is a stop for one of my positions, and that other dotted solid line is the stop for the other position. One of them's an ER1 overnight trade, shorting in the market on the day of the signal on the top day. The other one is for the ER3 short, which sold short near the high of the rally on the day after the signal, and they're doing fantastic. Next chart. The YM, we did get a sell signal at the top of the market on the exact day, July 18th, and we wrote it down until a few days ago on July 25th. The stop came down fast enough, quick enough, so that it got stopped out on that date for a great trade. And we're still trading higher than where we got out of our short. So good. But I'm still bearish. I'm still looking for this market to come down a lot more in the Dow, which has been the strongest, coming down the least, etc. So I'm not necessarily as bearish on the Dow as I am on the NASDAQ, which the YM, Dow Jones 5 minute chart, shows you the short-term trade. Now the Russell, I'm not that interested. We got a little double top and a resistance, looking for this low to be broken. If that's true, a little double top will have a minor downside objective, and I'll measure this for you. I'll take the average between the two highs down to the lowest low between those two highs, and that's that little yellow line right there. Drop the yellow line from the lowest low from the two highs, and your minimum downside objective is 2077. Yeah, right in the ballpark area, what I expect. Next, simply have the 5 minute Russell, Russell chart. And of course, it's going to get real bearish real fast when we start to break these lows. And that's the breakout of the double top, that level right in here. at 21.88. Below that, the abyss. Bonds. Resistance on a rally. Interestingly enough, it's relatively firm today. You would expect if interest rate futures are a little higher, that the stock market indexes will also be a little higher. That's the way they tend to go together. Bonds, I expect will stop and add the bearish fuel and turn down some. I'm not a lot bearish, very bearish on bonds. I'm just waiting probably several more weeks, maybe 1 or 2 months, for a sideways trading range to finish developing. And I think we're going to be in a sideways range for a while. Then very bullish. 10-year notes, about the same thing, but they are making a minor new high at the moment. But they're still within the range of a slightly upward slanted channel, if you want to call it that. I'm not calling this a very good example, but it's kind of like it. Crude, now oversold again. New lows for the move down. Buy signal did not work. That implies very bearish situations when buy signals fail right away. This one failed, and then it came down a while later, but this one's coming down right away after the buy signal failed. We didn't get hurt too badly. In fact, there's still very potentially likely, probable, possible, a profit on the ER1 bullish scalp because of the buy signal. But the position trade probably lost some money. Natural gas. We have a double top, and finally, you could call it yesterday, but today's a little bit more accurate. In fact, it's so accurate, it's within a couple of ticks. That's it. Of reaching my minimum downside objective I have been talking about, I suppose, since approximately a month ago. So this downside forecast is now finished. Not only that, we're almost oversold, and we have a bullish engulfing today at this point. So it looks like the market's just about to rally right back up again to about 2.3, 22, or maybe a little higher. Next, heating oil. Oversold. That implies that it's about to rally. But I think it has a chance of getting closer to these lows that we see back here on June 4th. And this is the September contract. We did get a sell signal almost exactly on the top of the market. And there's another sell signal that worked great. Now, this buy signal almost positively had a very, very profitable scalp. And this buy signal is very iffy. Sell signal, not particularly large loss or big profit, but the scalp probably was a small profit. Now, this signal, we finally got stopped out of weeks later at a lot lower when we had a buy signal, which didn't work on July 25th. But new lows, now oversold, getting close to a bottom. Again, I think it has a chance of coming down close to 2.285. Next, resistance line, bullish resistance line in gold. Keep your eyes on platinum and silver in a moment. I've been talking about it for weeks now. They're doing outstanding. The gold market is in a big sideways, basically trading range. I do think it's going to break out to the downside, and therefore the downside objective, once that happens, closing below 2350, then it's got an objective of 2178. But right now it's in a sideways trading range, so it could bounce back and forth between the rock and a hard spot. Next, this is the silver and the platinum charts, platinum in a moment, with a rare head and shoulder formation, small, 2 weeks in duration, that is actually by itself the last shoulder in a larger head and shoulder top. First, last shoulder here, and it's a head and shoulder by itself. Already worked. Minimum downside objective was fulfilled over a week ago. And the downside objective for the big pattern is 24.08, give or take a little. The bigger pattern has the head, which is around May 23rd, and the shoulder, which is exactly April 12th. Head and shoulder top inside of a head and shoulder top is very rare. Out of 2 or 300, you might find one. Next, platinum. And I've seen thousands of these things in a half a century. So platinum has the same formation, a small head and shoulder top that's just a little tiny bit larger than the silver, but not too much, a week, maybe a week and a half. But it is the last shoulder on the head and shoulder top where we did get a bearish engulfing ER sell signal red on the top of the market in platinum. And there's the first shoulder, which happened on April 12th. The minimum downside objective on the platinum is 808. Copper made a minor new low for the move, very slightly. I've talked about for the last couple of days the probability or possibility that it's trying to bottom out. So we see a new low, but there's no downside follow through, and it's super close to a little support. So I still say the same thing as I said yesterday. It's trying to bottom out. I just don't have quite enough technical evidence to proclaim. But all I need really is a close above 4.15. Well, 4 point, yeah, that'll work. Next. And then you're going to get a little rally out of copper, only up to about 4.3, maybe a hair more. Next is grains, beans, oil, meal, corn, wheat, then cattle, hogs, and then crypto, Bitcoin. Now, new low for the trend yesterday in soybeans, but it managed to close on a firm note, relatively speaking, to previous lows and previous closes and the range that it had yesterday. But it cracked the floor, it cracked the support area. And today we see that crack widening and we're almost making a new low, and we look like we're not going to close on strength. We're going to head south more. I don't really have a downside objective here. I'm just going to use my technical tools to help you decide when the break, this particular leg down, is over. And of course, if there's any evidence of a more profound, longer term bottom developing, but that ain't happening yet, that's for sure. I'm looking for significantly lower levels. This is a very, very longer term type situation. Big, big, big downside breakout in soybeans in the last couple of weeks. Next, soybean oil did it yesterday, but didn't stay down there. Now, it came back up above previous lows after they were broken. I have abandoned my previous commentary for a couple of months of a possible bottom formation, but yesterday broke the camel's back, so to speak, and I erased all my references to a giant head and shoulder bottom, which I was extremely skeptical about in the beginning. I started talking about it probably way back in April and May. Now, inside Doji today, high and last, trying desperately to hold at the support area, which has cracked a little bit. So we could have a short-term little rally, but very soon, a week or two, or maybe a lot faster than that, we're going to see new lows. Remember, we're oversold in the support area and managing to hang on by a fingernail. So I'm not looking for any kind of major rally by any means. Too much resistance above the market. Next, meal hasn't done what every other grain has done, and it has a double top with a sell signal on the second high. Great. Caught the top of the market, basically, but it hasn't come down very much very fast. But today, it looks like we have a price range that just could end up with a bearish engulfing. Not yet, though. And that probably would start a move down to my minimum downside objective of 305, 306, I think, which will probably continue to lower the prices to 300 and lower until finally it breaks down below 287. I am looking for, in the next few weeks, maybe it'll take a month or two to get below 287, long-term bearish breakout when and if that happens. And we got corn already around, well, it was on June 28th, a month ago. We had a major downside breakout, even a bullish engulfing buy signal, which worked sort of, but actually the low the next day was killing the formation. So no, sorry. Now it's about to make, it appears, new lows, and I wouldn't be surprised to see this thing drop a lot before the day is over if it can start hitting more stops. It looks like it just barely hung on by a fingernail here and is trying to come back for a slight bullish engulfing, which would cause a minor rally. And it might be at least up to 410, and it might even be up to 426. Now, that's not bad from 390, but I got to see it start to move up. We're low and last, and we're almost on the precipice here of, again, the abyss. Okay, wheat. Ever since the war, wheat markets on a longer term basis been making lower highs and lower lows, and it did it a few weeks ago, and it did it yesterday again, the lowest level for years. Looking for this market to drop off even more, but it did get slightly oversold. So I'm not necessarily expecting a real nosedive here, probably chewing its way back and forth into new low ground. Now, cattle. Very possible double top. Just happened. It hasn't broken out by any means yet. We need to start closing below 181.77. If that happens, then I'll put my little minimum downside objective on here. Okay, that's the highest high, and that's about the middle of the two highs. That's on the low of the break. So this is the stick, I call it, or the depth finder. The minimum downside objective, it would be 174.35 or more. Minimum, I said. So that's it for cattle. I just need this little support area to give way and not hold. And then once it has a breakout to the downside, this support area, that might cause it to bounce a bit, not to hold, and we're on our way down. And it would close an old gap as well. How about that? So I'm bearish. Hogs broke down yesterday big time. We did rally into resistance. We did rally back up to almost exactly a previous important high, June 18th. Actually, that high is not that important, but it did stop dead right at those levels in overbought conditions, in a resistance area, and kaboom, new lows today again. I am looking for a move down to 68 and test those lows. Next, Bitcoin. Yesterday, we made a new high for the trend up, but it closed lousy and had a bearish engulfing. Now, that would have been a bearish ER sell signal and turn red if we had been overbought recently or on the same day, but we weren't. So all I can say is bearish engulfing, one of my favorite daily technical signals, candlestick, and it's working. We made a low lower than yesterday's low, and we're down on the day, trading at the moment below yesterday's lows. So I think it's going to come down to 2209, and there's a big gap down in here to potentially close also. Back to the E-mini, I see we're bouncing a little bit. No shock. Okay, fine. I think it may stop around 54.64, and very possibly we may have just stopped rallying a moment ago. And because it got overbought on a very short-term 1-minute RSI, my custom. This is not Wells Wilder's. I learned RSI from Wells Wilder himself. George Lane, I learned stochastics. Larry Williams, percent R, blah, 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 blah. International lecture circuit from the 70s, 80s, and 90s plus. So we just could have turned down. You guys have a profitable trading day. See you tomorrow. Signing off.